Call it the January jaw-dropper jobs number. Yes, despite all the hand-wringing over Omicron and how it would affect that number, the economy actually blew away estimates of 150,000 jobs and created instead 467,000 jobs in the month of January. That blew out the estimates, following up with substantial upward revisions to November and December. And average hourly earnings rose 5.7% from a year ago. Now, here's the rub. You pair that wages hike with the record number of people quitting their jobs these days, and some companies and sectors will really have to up their game. Kelly Services knows which ones. They provide workforce solutions to various industries. Here in a Fox Business exclusive, we welcome Kelly Services CEO and President Peter Quigley on which areas are grabbing employees. Peter, workers are now in the catbird seat. That's not necessarily news, but now you see an even bigger jump in hourly wages year over year, plus the quit rate, which is pretty stunning. And that equals what for employers?
Well, it's good to be with you, Liz. And as you said, the January jobs report really blew away any expectation. The headline is also, it could have been a lot better. There were 2 million workers who couldn't participate in the labor force because of Omicron, and twice as many businesses had to shut down at some point during January than they did in December. So we clearly are in a very, very tight labor market. And as you said, that's going to result in significant quits, as well as the signs of wage inflation that you mentioned.
Well, yeah, and we do see that construction, as Hillary Vaughn just pointed out a couple of minutes ago, they were the ones that had some contraction. They lost jobs. But that part aside, when you see this list of how many jobs are being created, it's pretty stunning. And then you just mentioned the JOLTS, the job openings and labor turnover. That quit rate hit the highest on record back in November. 4.5 million workers quit their jobs. They're not all just sitting back on the beach and saying, I'm done working. They have better options, do they not? And what does that mean for certain sectors that have to increase and up their game?
Yeah, there's no doubt that workers are in the catbird seat, as you mentioned. I think we're seeing the greatest amount of quits and wage inflation among individuals without a four-year degree that are in the lower wage roles. We see elevated quits and strong wage inflation in leisure and hospitality, accommodations and food service, manufacturing and distribution. And for the first time in a while, a lot of these blue-collar workers have choices, and they're taking advantage of the increased power they have to look for work that is more accommodating to the kind of life that they want to lead.
You started to see this at actually the height of the lockdowns, where Amazon, Walmart, and Target began dangling all kinds of incentives in front of employees and potential employees to say, we need you, and we are valuing what you do. My question is, as this situation, you just said blue-collar workers, but I would figure services, people who are hourly employees who make minimum wage or just above it, also have a lot more choices. So does that mean that names, and of course we're thinking stocks, everybody from restaurant companies and chains to Amazon may have to start doing something even more? And what does that mean for their bottom line?
Yeah, I think all the discussion about the Great Resignation, while it's a clever title, I think is a little bit simplistic. And employers need to recognize that there is both a great reluctance and a great reset. And the great reluctance are those individuals that aren't coming back to work because of healthcare concerns or vaccine or mask mandates, or they have childcare requirements, or they're enjoying a bank account that they haven't had for a while. The Great Reset is all of those individuals that now have the ability to question whether the job they're in is the right one for them. So whether it's increased wages or flexible work time or a different commute or better culture, workers are clearly taking the opportunity to recalibrate at all levels, blue collar all the way to high level positions.
Okay, we do have some people who are in a position to choose whether to leave their current job. Which areas are stepping up wages and paying more now?
Well, at the lower end, clearly there's a lot of wage pressure to attract people just to not only come to work, but stay at work. The competition, increasing a wage by an hour, I mean, $1 or a $1.50 per hour will get people to move down the street. So there is a great deal of wage competition, but employers need to be smart too about the other things that they're selling to potential employees. Things like flexible time, time off to with kids in school, other perks that they can offer. All of those things are important to the employee value proposition.
Well, I agree. And it's interesting to see how much this pandemic has changed what used to be a very strict 40-hour work week in the office. Got to be here. A lot of things changing. Peter, thank you very much. Peter Quigley of Kelly Services.
Thank you, Liz.